Climate finance is such a huge project for the whole world that we need everybody. Climate finance can indeed involve more private sector in financing innovations. We need both parts. We need the private sector, we need the public sector. Public sector has maybe risk-taking capacity in areas like basic research, on which then the private sector can build on making those innovations and financing them. So we should not forget one or the other. Both are absolutely needed. There is so much work to be done, so much financing to be done, and so much innovation and technological advancement to be made that there is work for everybody on this area. I would almost turn this question around and say that no recovery financing should be done without climate change in mind. We have to take into account in what is now called building back better, and we need to take that literally. We need to take into account climate change mitigation, i.e. renewable energy and energy efficiency, but we also have to take into account climate change adaptation in everything we do. This is meaning resilience to climate-related events, as we have now recently seen with the floodings. So we absolutely need to keep this in mind everywhere, and not only climate, but also biodiversity issues, circular economy issues, etc., etc. So environment as a whole needs to be on the table in everything that we plan and everything that we finance. Multilateral development banks such as EIB work together a lot on climate change financing area. We have been doing this for years already, earlier probably than the private sector really started to get interested in it. And we work together, we co-finance projects very often. For example, in the emerging market countries, we finance renewable energy, a large project together. We also have been working on common definitions, what counts as climate finance, and on definitions on how we calculate how much has been done. So, and we also have plenty of technical expertise where our best experts in the world probably work together on all these topics. Green bonds are a simple principle, in fact. It means that the borrower of the bond tells you in advance what they will use the money for, and of course they will be used for something green. Very often it is climate change related projects like in renewable energy or energy efficiency, but it can also be other areas of environmental aspects like water systems, biodiversity, circular economy, and all of this. This sounds like a simple thought that you just say what you use the money for, but in fact, when the European Investment Bank did this for the first time in 2007, this was quite a revolutionary project. So the idea that you tell what you use the money for, but also you tell afterwards what the impact of that financing has been, is quite revolutionary, and it has been hugely interesting for investors worldwide, and this is why this area has grown exponentially in the past years. You want to choose the best products and the best projects to finance. In order to know this, how green a bond is, we need definitions. This is something that the European Union has been working on as a trailblazer in the world, and EIB has been, the European Investment Bank, has been very much involved in that work. So when you have definitions which are transparent, technical screening criteria which are transparent, you can actually evaluate which bond, A, B or C, is the best for whatever you want to finance, and that's how you can choose. And this is why it is important not only to know that the bond is green, but how green it is.